Good afternoon and welcome to BizTech Asian Midday Market Watch. I'm Samantha Voon, and let's start by taking a look at the summary of market actions. Over in the US, we've seen a severe downtrend on the Wall Street driven by disappointing earnings from major tech companies. Wall Street index fell sharply overnight, with Nasdaq Composite dropping more than 3% due to underwhelming earnings reports from Alphabet and Tesla. For Alphabet's performance, it did contribute to these losses, even though the company's earnings exceeded expectations. We have concerns about slowing advertising revenues and rising costs, especially related to AI, raise apprehensions about similar trends in other tech companies. So expectations for US interest rate cuts also have prompted a shift towards more economically sensitive sectors. Despite the US stock index futures see slight increase during Asian trading hours, indicating a potential stabilization of Wall Street. And investors also are waiting for forthcoming data of GDP as well as the PCE price index. Over in China, negative sentiments persist, with the country's stock indices nearing their lowest point since February. We have the Shanghai Composite down 0.39%, and these indexes have reached their weakest level since late February. Overall, the Chinese stock markets have been hit hard by weak economic data, including slower than expected growth in the second quarter. Despite efforts of recent rate cuts by the Chinese banks to reduce borrowing costs and also following an unexpected cut in the loan prime rate earlier this week, it has done little to boost market sentiments. Over in Hong Kong, the Hang Seng index dropped by 1.43% as losses in Chinese internet companies mirrored declines in their US counterparts. Over in Australia, markets also declined, with the AXX dropping 1.14% following a series of falling by 1.14%. Over in India, the Nifty 50 decreased by 0.47%, and the index have been experiencing significant profit taking recently. In Singapore, the STI is down 0.77%, and in Kuala Lumpur, the KLCI is down 0.27%. In Japan, the Nikkei 225 dropped 2.86%, and in South Korea, the Kospi is down 1.61%. So, additionally, we have the SK Hynix, a major player in the memory chip industry, saw a stock fall nearly 9% despite reporting stronger than expected quarterly earnings. So that's all I have for today's market updates. And to give insights to markets, we have Glenn Yin, Head of Research and Analyst at AETOS Capital Group, to give us insights for today. Glenn, thank you for coming on the show today.
Thank you for having me again, Sam.
So, I just wanted to look at what's happened yesterday with Nasdaq records having its worst day since 2022. What's going on there, Glenn?
Yes, Sam, indeed a very scary session. In fact, it's another scary session since we did our last show weeks ago, and that was the first bloodbath, and this will be the second one. So a very scary session in New York. I mean, the broad-based decline was in play, and the Nasdaq, like you said, recorded its worst daily performance since 2022. So that's about 400 trading days ago. And the last time we had a similar drop like this was back in 2022 when the Fed was hiking rates. Then the markets could see signs of this massive correction coming our way, because in late 2021 we had the taper tantrum, talks about the Fed collecting the excessive liquidity back from the markets. So that was something that we could see and it would make sense in terms of macroeconomics. But what's confusing a lot of investors right now is the fact that we are not going to see more hikes. Instead, we're going to see cuts coming in as soon as September. So what's the big fuss? And the answer is quite simple, because it's a typical buy the rumor and sell the news trade. We have to remember financial markets are always forward looking. So when there's very little to pricing for, the potential risk and reward ratio changes dramatically and simply no longer worth risking your capital in the cooling trade. So unless we see something very optimistic and is not yet pricing by markets, then we might see a rebound, a sharp rebound. Otherwise, I personally see more downside pressure building across US equities before the election.
Mhm. And I suppose this, as well as what I touched on earlier slightly, the stock rotation, right? Is this why investors are suddenly becoming risk averse?
Yes, Sam. So if you jump onto Bloomberg, you jump on the Wall Street Journal, you'll see these headlines everywhere. The great rotation is taking place, and yes, a lot of the capital has already gone into undervalued stocks. So when we talk about undervalued stocks, a lot of investors will think about earnings reports and they hop onto Edgar and dig the financial reports, uh, you know, and when we talk about rate sensitive assets, once again, a lot of people will think about tech stocks and financial stocks, but think again. Small companies that do not have long and attractive track records of making profits, they are the ones that are actually sucking up this capital because they are also very rate sensitive. What does that mean? It means these companies have a very high funding cost because they are not well known. They are not, have a very strong balance sheet, so they are also very rate sensitive. The high funding cost coming from debts, issuing bonds, or capital raising from stockholders. These are building up on them as well. So they're burdening these firms, high funding cost. So when the rate cut comes, they will benefit as well. The lower rates, they love that. And whether they make a handsome profits or not after the cuts, that's another question for long-term investors. But for speculators, for traders, it's a better bet compared to those tech giants that are already trading at unbelievable multiples. And this is why we see the Russell 2000 index has outperformed both the S&P 500 and Nasdaq. The SPX, when I checked this morning, it was down by nearly 1% on a monthly basis, whereas the Russell 2000 is still up by nearly 8% after several rounds of sell-off. So there we go. That's where the funding, where the capital has flown into.
Mhm. Thanks for shining light onto that, Glenn. So, are there other risks that investors should be looking out for?
Definitely, Sam. I think volatility will remain throughout July, August, and it may further intensify in September, given the Fed cut is pretty much slated for September, and the US election will reach its climax very soon. So that the political uncertainty and the Fed's annual meeting in Jackson Hole in August are definitely something to put on our radar and keep our eyes open for. Risk management is the key going forward in these turbulent market conditions.
Mhm. All right. Thank you so much, Glenn, for coming on the show today.
My pleasure.
We've been speaking to Glenn Yin, Head of Research and Analyst at AETOS Capital Group. This has been BizTech Asian Midday Market Watch. Be sure to be informed on the latest market updates weekdays at 1 p.m. I'm Samantha Voon, and this video and podcast will be on our website, www.biztech.asia, as well as our social media platform. It will be on our syndication partners' TV stations, radio stations, and website. Remember to like and subscribe. Thanks for tuning in.